Hey, good morning, everybody. Bob, Trade Genius, the 26th of May. And I'm going to do something a little different. It's going to be a little bit longer video. And I'm going to go through every sector, at least that I found in ETFs. If I'm missing one and you're interested in me following it, let me know. I don't have too many of the country ETFs in here, so this is mostly domestic sectors. And just let me know if you want me to add anything to it if you're interested, because I'm going to do this every week from now on, and I'm going to point out areas where I think there's potential reversals one way or the other. So here goes. I'll try not to be too long. So this is the first one is SLV, and right now, the metals have been grinding down since basically late February, and probably trade war related, dollar being held strong, and Fed not relenting. I think we may be in this mode here for a little bit, but I think we're ready for a bounce here. The This indicator down here is showing me the stretch between these two indicators right here. So I talked about this before. The 13 and the 48 are the two moving averages that, if you just traded their crosses, gives the best ROI. And this was an academic study done, thousands and thousands and thousands of historical back tests. They looked at every different cross there is, and that's what they came up for. So I'm interested in and seeing how this thing works. I also follow a 565, and so I'm just going to see which one will give me the best opportunities. So I took it one step further, and I'm looking for actually before crosses, when you start seeing the convergence between the two, almost like a modified MACD, and that's what this signal here is. And I'll show this to you as they pop up. I already have them filtered just to see if there's if this gives us any kind of front end warning on this stuff. So it works pretty well on the individual side. We've been looking at it for the last 2 weeks, and definitely for day trading, it works very well. So combined with other filters, it gives you a high probability setup. And so looking at silver here, it's in a wedge on a different chart. You can't really see it from here, and so I'm looking for a bounce. It's pretty stretched right now. This is the silver miners index, and this is really stretched. And we're also below the channel. And so I think there's an opportunity for it to at least bounce to the channel and get up at least to the moving average or to top of the channel. That would be dare to dream. But I think there's an opportunity here to probably go long here in sometime in the next 3 or 4 trading days. Same with gold. Gold has been hugging the bottom of the channel. This is the gold silver index, XAU. And this is actually about ready to cross. So I'm looking for an opportunity here. Just so you know, these indicators here are looking at money flow is here, and stochastics are here. And so I'm looking for this these things to turn up. Money flow usually actually even leads the moving average convergences. So I have a filter for this as well, and just to give me an opportunity. And this one here is just telling me when these stokes come out of embedded areas. So that's my filter. So I like momentum, and I like the convergence, and it gives me a good. And money flow to me is as good as people picking for order flow without all the drama of trying to determine, whether or not you got the order flow right, which is dynamic anyway. And then emerging markets are still being pushed down. Look, they're going to pop when the dollar relents, and they're really stretched too. When you get ETFs that are stretched, 5% from, 2 moving averages, it's being pushed down pretty hard. It still could keep falling, and who knows? It could be secular. But right now, I'm no interested in emerging markets at all. This is the copper index. And now this is pretty low volume. I just have it here because it matches up. I'm going to probably replace this with COPX. I just didn't get around to doing it yet. I think it'll give us a better view. but copper's being knocked down pretty hard as well, and I think that's all trade related. Trump comes through with a stimulus package. Copper related companies are going to rock. Palladium, I think there's a bounce here. This is the Sprott Palladium Platinum. The bankers have been having a problem suppressing this, so I think there's an opportunity here, and I'm probably going to suggest to go long on this on Tuesday. Setup looks pretty good. Here's the 10-year yield, and this is on a freight train down, and I don't see anything telling us that momentum is changing. The only thing is that it's at the bottom of the channel here. You might get a bounce here. They use selling the bonds to support the stock market, one of their funding mechanisms. So just bear in mind. But secularly, we'll be able to refinance our homes here probably in the next 6 to 9 months. VXX is reversal here. When this thing dips below the zero line on this, it's pretty good. If my money flow gets up here and converts down, that's a pretty good as well. I haven't traded this one as much ever since they blew up XIV and they took the leverage out of this. It's not been as much fun, to trade, but it's a good opportunity once it gets pushed like this for profitable writing puts. I never go long. I look at these because they're structured to roll and fall. So you always look for opportunities to go short VXX, unless you're hedging a big portfolio. I'm just speaking simply as a trader. IWM is interesting now. It broke down this week, and so we'll just have to see if a bounce is coming. Money flow is starting to turn back higher, and I think we're going to probably get a bounce next week. And so just bear in mind on that, and we may get a signal on IWM to go long. This is a small cap Russell. Discretionary is drifting down. No interest whatsoever here. I think it probably has to fall another 10%. This is the industrials. Look the same. Looks like money's coming out. Here's the Qs. Technology is struggling here a little bit. There's nothing here that says a bounce is imminent. This is another version of a tech index, the XLK. Looks the same as the Qs. Financials are interesting. It looks like they're trying to get a bid here a little bit. Just keep your eye on this, and this thing turns back up over to 13 MA. Money flow is starting to diverge from the direction, so you might see a bounce here. If you see a bounce here, then you may see the 10-year move up as well. So just keep an eye on that. And if the 13 rolls back up over the 48, then this thing may get a bid. GDX is flat and struggling, and most of my positions are, maybe I'm being stubborn, but I've been just trying to hold minors here, and because I think we're going to get an explosion anytime soon. I just think they're going to really fight deflation aggressively when that shows up, and I think they're going to spend whatever they're going to spend for this election season. But right now, GDX is kind of neutral. They've been fighting off the selling, but it's not really going anywhere. We're getting a lot of these day moves. Last week we had two trades, and the time before I didn't get out of trades that were nicely profitable that ended up being losers. Until we see a turn up here in the metals and the miners, that if I get these 2-3% pop days, I'll day trade them, get out, and share that with our subscribers. That's what happened with us last week with MAG and AG. We got 2 pops, made 2.5-3% on both those, and by the end of the day, they both came back down to neutral. Although AG is starting to get a bid again. Here's the material sector. it looks a little bit like the financials, so it's kind of holding, but there's not a buy yet. Here's energy. I think energy is going to come out this summer. It's just way overdone, and I think prices are going to start coming back down. I think they used as a speculative tool the oil price, and now I think you're getting that unwind is happening. All right, this is the marijuana ETF, and it's pretty much flattish. From a fundamental standpoint, you just got to trade these based on momentum, because none of them are profitable, nor any of them will ever be profitable. It's just right now, it's just in the zeitgeist, especially for young people. This is the basically the cryptocurrency of the stock market right now. A lot of hot money. It moves this thing around a lot, and but at the end of the day, unlike cryptos, marijuana stocks will never be profitable, and you'll see that whole world disappear or be taken over or taken under, and these things will all go private, and they'll right size them for profitability. Here's the SPY index. I think SPY is going to come down. There's probably 10 points, 12 points in this down. There's gaps to be filled, and then it's going to trace out an inverted head and shoulders that I think is going to occur, and then I think we're going to shoot right up to the top of this channel right here. But right now, money's been coming out of it. I think next week we're going to probably bounce. Money flow's turning here. This is the moving average of the money flow. I signal off this moving average here. So just keep an eye on that. Okay, we get a buy signal on biotech. And so we're still a little early here. We got flash on money flow. We got flash on the convergence. I think once these stokes come alive, I think you'll see more money coming in here. So there's an opportunity here if you guys want to then look at biotech companies. I may do a video later today because tomorrow the market's closed. Maybe I'll do it tomorrow, and I'll look at some of the big names in the biotech space to see if there's an opportunity to trade a signal. Uranium is had a bounce into the moving average and then sold back down, but it's still holding. This thing is going to be propelled by the 232 report. So this is going to be news based, but it's a good place to put money in medium term. Nat gas, the problem with UNG is it rolls like the VIX, so you have to be really right to catch it long. The best way to play UNG is to, when you get these spikes like this in the stochastics and they roll back over, is to buy puts, okay? Or money flow turns over. Not buy puts or sell calls, your choice. It's hard to make money going long this, because as the contracts roll, it forces the price of UNG down. Okay, I'm not going to talk about the short because we just talked about SPY. Here's oil, like I told you. This might have put in a little bit of a bottom here, but I think oil prices are coming down. And depending on the economic background, how far it goes. But right now, and we're also coming into the season here. June usually tops it. If it's a really good year, it'll go till September. But we're swimming in oil. And so once these speculators come out, I think China did a buy strike on this. So there's going to be panic in the space here, where people that have been speculating on oil will have to dump, and then that usually feeds on itself. And just like you see sometimes with gold and silver or food prices, when the futures markets start to roll over, then everybody will start shorting it to protect their position that they're long in and try to ride out the wave, which makes it even worse. This happened with oil before. What took it down from 115 to 29, I think, is that the producers, everybody was shorting right along with it, so they basically hedged themselves. And so that's always a possibility with oil. So if they lose control of oil, then it's going to fall pretty hard. But right now it's on a sell. Okay, here's the short cues. I'm not going to talk about that. And then here's the Bitcoin variant for the stock market. And it's just been grinding higher. You know, Phil talks about the cryptos more than I do. All I'll say is that, you know, the Litecoin halving is in process, and we're looking for at least another 50 to 75% move there. And then with Bitcoin, we think it's going to have the same trajectory that Litecoin had. You know, this is a plus 8x move. So you could do the math, you know, on that. But, you know, starting from a base of around 3,000, you know, I think this halving move in Bitcoin will take us over the old highs. And so look for pullbacks here if you just want to trade it via the stock market. But right now it's looking pretty good. This is getting pretty stretched though. And so there might be a possibility for a pullback in Bitcoin before the next launch. But with cryptos, that's not necessary. You know, these things can go parabolic at any moment. Here's healthcare. Healthcare is has a reversal buy on it too. It looks like people are getting a little defensive. So there might be some opportunities there. We took a shot at Tenet Healthcare. I had my stop too tight, but it flashed a buy, and we got knocked right out of it because the market turned right around the next day. Next time I'm going to give it a little bit more room, but there's some opportunities in this space here at the moment. Here's the staples. People are getting defensive here. This move, I think, they've already is playing itself out right now, but right now it's a buy, as well as TLT. And then the real estate, which is always ironic to me, but it's just an interest rate play, is they flashed into the buy for URE, and you got to take the trade, but real estate long term's in big trouble. DBA now is coming up to a very interesting thing. DBA has the same problem as natural gas. Anything with these future contracts, when they roll them, unless they go into backwardation, which means that the contracts that are expiring first spike in price, they can keep rolling these ETFs down in price. That's what's so frustrating about it. And you're starting to see some concern here. I think DBA is going to break out, and it's going to be a potential big mover. Corn prices are going to probably skyrocket here, and they can't get it in the ground. They're going to have to ship the soybean, and they might not even get the soybean crop in the ground because those fields are soaking wet. And so just keep an eye on this, and that affects everything else in the food space because corn feeds all the animals. But right now, DBA has been a buy. It's been a buy now for the last 3 weeks. It's coming up with some resistance here, but it may just push right through, and this might get its breakout. I think when they do the June ag report and they find out how much crop is not in the ground, I think you're going to see this and also CORN fly. Here's the utilities. Utilities are rocking, but this little candle right here might be saying that this move might be done. There was also a study done, which I now put into my portfolio, the XAU utility compare, and we're at a point now where usually people move out of this and into gold. So it's interesting. I wasn't aware of it, so I've been studying the reasons and rationale. And when I get a better handle on it, I'll share it with you. But it's predictive, and so this was giving me hope for the miners, because last time that ratio hit as it's hitting now, we had an 8x move in the miners. So, and it happened fairly fast. And in June and July, this is friendly for the metals and miners, so we might be seeing some rotation. So keep that in mind. And I think that's it. So thanks for bearing with me. Let me know if you like this approach or not, if it's too long, or if you want me just to look at some of the highlights. I just want to give you guys information, and then tomorrow I'll drill down in some of the stocks that I think might be opportunities where we're flashing these reversals. Thanks for listening, and for those who signed up yesterday on our special, thank you very much. I really appreciate the enthusiasm and all the new people that are joining us. And if you haven't yet, check us out. And we really do try to help you guys make money nearly every day in the market. So Thanks for listening. Have a good one. Bye-bye.